Hello, everybody. I'm finally 100% well. This is episode 21. Let's get going. I had to take a huge break from everything, get myself together, but I'm glad everything worked out. So, this episode is on QuantumScape. QuantumScape is one of my favorite stocks to trade, but it's a very risky play. 2020, they had a record year and they were, fairly new to the market. The stock, I was trading it in triple digits. Every day, I knew that if I put in a couple of shares, 100, 200 shares, no more than that, because it's very speculative. It's highly speculative, but it's the right candidate, especially from the EV space. So QuantumScape, they created solid state lithium metal batteries, which is different from the conventional lithium ion battery. So not only it's going to allow for electric vehicles to go twice the distance. So instead of, let's say, 200-300 miles, they're going to go to 400-600 miles. It's going to change the game. It's pretty much going to revolutionize and change how fast your batteries charge. That's another thing. So the charging length is going to be greatly reduced. But it is in a stage of development, but it's getting a lot of traction. So the reason they got hit really hard is a lot of these class action lawsuits and what they have promised, what they delivered, and but they're still a company in the development stage. They raised like $1.5 billion from Kensington Capital. Volkswagen is giving $100 million every couple of months. Then Bill Gates actually, I think, also is one of the investors. So they're taking a loss every quarter, but they're planning to spend about $500 million. I think like 200 and 290 million separately for operating expenditures in 2021. And Wedbush Securities also got on board, so they invested a lot of money. So this stock, it has a lot of legs, but in my opinion, it's fairly still at $58, $59. It's still highly overvalued because they don't have earnings. So this stock can easily go down to $15, $20. Look at what happened to Lordstown, right? Lordstown, one scandal, one allegation of what the CEO promised versus what they delivered, it just crushes the stock. And these EV stocks right now are hot, but at the same time, they're oversaturated with a lot of amateurs that just stepped into I call them the Robinhood traders. So it's oversaturated by Robinhood traders that have significantly increased in the last 18 months. So before, retail trading was about 20-30%. Now retail trading is almost half. So you have to be careful with that because bubbles explode. And if you're not able to short sell, and TD Ameritrade doesn't allow me to short sell QuantumScape, and you're just playing this on the long side, you got to be very careful when these bubbles burst. And this stock came from $110 down to $50, and it hasn't had the same traction, and hasn't had the same momentum ever since. So go ahead and watch this episode, the little bit of analysis that I've done, technical and fundamentals on QuantumScape, and we'll talk a little bit after this video. Okay guys, so let's go ahead and look at the technicals and then we'll look at the fundamentals. So this is the 1-year chart of QuantumScape, okay? So this is where I was talking about the end of 2020. Look at the astronomical exponential rise to triple digits, which is like 120, 130. So, these days, like, you could just almost bet on the fact that either it was going to trade sideways or it was going to go up at the open and then kind of fade out for the rest of the day. So it's kind of became my go-to stock in the mornings. I would just put a small position of my portfolio into it, knowing that I'm going to scalp some profits. So But when the crash happened, after that, it wasn't the same anymore. And throughout this long downslide, all the way till the beginning of February, things were getting pretty serious. And if you're trading or you're investing, you don't know how low this stock is going to go if there's no earnings, right? There's no PE ratio. So if this company is trading over here at 40, how do you know how low it's going to go, or, you know, when is the bleeding going to stop? And look, if I go to Yahoo Finance, right, stocks that don't have positive earnings per share, you're not going to see a PE ratio. So when there's no PE ratio, you really can't peg a multiple on it. You don't know the price earnings ratio. There's no way to calculate that. So that's why we're going to do a basic fundamental analysis after this. So just looking at basic, you know, the red line is the 200-day moving average, the yellow line, 50-day moving average. The stock price has been going in and out of the 50-day MA. Right here is when Wedbush Securities upgraded the stock, which was kind of a breather for all the investors because all the confidence came back after that. So even though it was selling off, you know, there's a lot of institutional interest that was coming back. Still, at $59 on valuation basis, it looks expensive to me, but looking at the clear support around 40-ish, 45 or so, you want to scale in incrementally and kind of see what it does. But again, these are risky stocks, and when it falls, it falls. Look at how much it dropped. So this is a good trading stock, but again, long term, they have a lot of promises. So we'll see what happens with QuantumScape. Now let's look at the fundamentals real quick. The best way to look at the earnings report, you can go straight to their website, like QuantumScape.com, and then go to, you know, financials, quarterly results, SEC filings, or you can just Google QuantumScape earnings report, or 10K for annual report, 10Q for the quarterly report. So I already pulled it up. So we're gonna quickly look at the balance sheet, just the basics. So your balance, you know, let's look at the income statement first. And I don't want it to be blurry. See, I hate shooting with my phone because now it's okay. There we go. So look at all the expenses, guys. They have operating expenses. G&A, of course, and then they're showing a net loss right here. Let me zoom in. Look at that beautiful net loss. The 3 months ended 694 million, and then the 12 months ended is $1 billion. So they took a $1 billion loss at the end of 2020. So what happens when a company keeps taking loss after loss after loss? On their balance sheet, they get a nice accumulated deficit at the end. See that? Accumulated deficit. Man, I'm so sorry, guys, about this stupid phone here. I need to get like a professional camera. So look, accumulated deficit 1.4 billion already. So accumulated deficit is all the negative losses that have been taken plus the dividends, if there are dividends that have been paid out, right? So just the, you know, basics of the accounting is assets equals liabilities plus owner's equity, which is stockholders' equity. So the formula is assets equals your debt plus whatever the equity was at the beginning. And if you have some extra time, you can sit there and look at all the different types of stock, like common stock, preferred stock, and how much they started off with. But I'm not going to go into that right now. I'm going to go into the important part, which is the liquidity of the company. And the cash and cash equivalents for the, I think it's 12 months. Yeah, for the ending of 2020 was 113 million. Oh, actually, no, another 884 million. So
About, yeah, billion dollars in cash they showed in 2020. And I was reading this report and they said that they're gonna boost it up to 1.5 billion. And so they're gonna have a strong liquidity position for 2021. Liabilities is very low versus their assets, right? Their liabilities is what, 23 million, 24 million or so. So they got a really good CEO. They got a really good management team. They have very bright individuals working for the company, and they're keeping their debt under control. But look, the company's not making any money. Okay, so until the actual battery is available for sale and then they scale it out, that the money is not going to come in. So just know that you're in a good quality company, that there's a lot of progress to be made, but they're taking baby steps at this point. So what I'm trying to say is, if there's no PE ratio, right, like we looked at it, there's no PE, there's got to be other tangible ways for you to evaluate a company, because you don't know how low this stock is going to fall, right? So, I mean, imagine if Wedbush Securities, right here, imagine if Wedbush Securities didn't upgrade the stock, or the stock keep selling off. You know, investors, after a while, if you don't satisfy them, they're going to sell the stock and move on to another company that's delivering. So this stock is slowly on a free fall, and eventually the valuations take over. But if there's no earnings coming in, who knows how much are investors willing to pay for this, or how impatient or how loyal they will be. So it's always good to do fundamental analysis. And this is why I teach this in my school, and it's very boring, but hey, you know, this, for you to be safe and to be an astute investor, being better prepared than the next guy, you got to know this stuff, guys. You got to look at the assets, liabilities, you got to look at the equity, you got to look at the income statement, and then you have to go look at the management discussion and analysis. So it's best that you don't have to read the whole thing, but at least the main paragraphs that talks about the most important stuff. So yeah, there's the CEO. You should check out his interviews on there's some interviews on YouTube. Yeah, they got a really good team, and I like the company, and it's one of the stocks it's been good to me. It's been good to my fund, and I continue to trade it, but I'm very aware of the risks and potential pitfalls.
Okay, guys, so just to recap, what we learned is when a company doesn't have any earnings, so your best bet is to do other fundamental valuations, such as looking at the balance sheet, looking to see if there's any tangible net worth, looking to see if they're a strong cash position, which in QuantumScape's position, we did have a strong liquidity. So if there's no earnings, there's other things you have to look at. It's not just looking at the charts. You know, charts is good for the short term, but if you're an investor, you're holding these stocks longer term, you got to know what the company does and what the intricacies of their financials are. One other thing I want to tell you is, I differ myself from other traders, investors, or money managers. I don't care about being right. I really don't care if QuantumScape's ridiculously overvalued and trading at 100. So my job is to be on the right side of the trade, whether long or short. So if it's a very expensive company, then I'm holding option puts, and I'm also scalping on the long side at the same time. I'm not one of those guys who sits there and says Bitcoin is overvalued at 40,000, Bitcoin's overvalued at 50,000, 60,000. I'd rather be the guy who says, you know what, I was wrong, you were right, let's follow you. Because at the end of the day, we're trying to make money. Don't care too much about your ego and try to be right all the time. So in QuantumScape's example, when I was going from 60 to 80, I already know I was on the overbought condition. I already know that this is ridiculously high, but it's high, but it could go higher. A lot of my money is made from betting on at high prices that go even higher. So I'm not going to be one of those guys who sits on the sidelines because something is too expensive. No, there's always ways to make money. Worst case, to be on the safe side, you just trim your position size. So if you're betting 200 shares and it goes from 60 to 80, why don't you take off half? Now you're only betting 100 shares. If it goes from 80 to 100, then just bet 50 shares. Put something. If the running horse is running, you better bet on it. I don't care how much. So if you think something is very expensive, bet a little bit. Bet small. Make $20, $30. Who cares? But bet something until the reversal occurs. So these stocks like Nikola, QuantumScape, Lordstown, Excel, Lee, all these Chinese electric vehicle companies, I will bet on any of them. I don't care. I usually get this question like, Edgar, what are you trading? What names? That's a stupid question. I'm trading anything that's moving. I will trade anything that's moving. If it's a micro cap and it's a garbage junk stock, I'll put $100 on it just to see what happens. If AMC is being manipulated by Wall Street bets, I will drop a couple of $1,000, whatever. I'll put some. If something is moving, has momentum, I'm putting something on it. And that's how you should treat it. But being a professional is knowing your position size, knowing how much you're risking from your overall portfolio. So don't get scared of crypto. Don't get scared of these junk companies that have no earnings. I'm not calling QuantumScape a junk company, but there's a lot of horrible companies that are, I don't even know how they're on these exchanges. They should be on the penny stock, OTC market. So what I'm saying is position size is everything, guys. That's the number one key takeaway you should take from this episode is adjust your position size to the risk of each company. All right, guys, see you next episode.